Welcome to your Monday Futures Market Outlook for February 21st, 2011. This is Patrick Serezna. For those of you that have not had the chance to try out our eMiniSource.com trading room, 5-day complimentary memberships are available. As always, we start off with a weekly chart of the S&P 500 going back 3 decades. When we plot an 80-week moving average on there, does a very good job to depict the bull and bear market cycles the market has gone through. We've remained above that 80-week moving average since 2010 and have continued to advance. One thing we continued to discuss was off of those lows in the summer, we were looking for a rally that was going to come up towards this 1350 area, and really at this stage it would be healthy for the market to go through some form of profit taking or consolidation downwards. We don't necessarily want to consider another bear market yet, but at this stage what we would at minimum be looking for is some sort of daily chart topping formations and subsequently some healthy profit taking. When we take a closer look at that S&P 500 using the daily charts, we were looking for a rally that should come to an end somewhere in this 1340 to 1360 area. Our outlook was helped out by all the Middle East crisis and North Africa crisis, as they're trying to resolve some political issues, as spiking oil and creating certainly a certain amount of uncertainty for the broader marketplace. Now, in the end here, we do believe that this is a place where the market needed to consolidate from. So if it's going to use the Middle East crisis as the catalyst for that, so be it. Really at this stage, even though it's a very sharp reversal, doesn't always mean that it's that we can't have retesting of those highs and so on. But eventually we're going to be looking for a full market consolidation that should make it all the way back down to around the 1250, 1260 area on the downside during one of these consolidation periods. Just to review our key points, we have an intermediate bullish bias on the markets, but we are only a few percent off our upside targets for the year. We continue to have momentum loss and a lack of market breadth. The rally is going purely on the back of large cap stocks, which are already getting very overbought and top heavy. The market is now overdue for a correction, and if that Middle East crisis does not play the catalyst at this moment, we still do expect the market to go through a multi-week topping formation and still profit take, even if the Middle East crisis is contained. In the bigger picture, we still don't want to imply any bear market scenarios, but it'll always be about the degree of selling during one of these profit-taking cycles. But it's very unlikely that this market is going to just keep rallying without taking a couple of breathers along the way. When we take a look at the NASDAQ, it actually represents the same story. We were looking for a high to come in somewhere in the 24 to 2450 area on the upside. If this Middle East crisis is again going to play the catalyst for profit taking, so be it. But nonetheless, we're looking for some selling to probably make it down to around this 2340 area on the downside to find some supports there. But in the bigger picture, we should see consolidations down to our red focal lines on the downside, where we should see the testing of some sort of short-term lows. Next here I want to take a look at the US dollar index futures, and this is going to be an interesting story here because overall we had this flagging formation that was rejecting right off of our blue box that gave us every indication that the dollar index was ready for another leg lower. But if during crisis periods, if this situation starts getting out of hand out there in the Middle East, then the US dollar in many cases is where a lot of money flows to for safety. And if we see the dollar index not make a lower low here and find supports and start showing some sort of bottoming formations, we could have a US dollar short squeeze on the upside. So while I clearly put in a bearish flagging formation in here, understand that there's now a theme-driven event that could potentially create reversals. So it's going to be very important to watch what happens. Next here I want to take a look at copper futures. We more or less have seen copper futures rally up towards this 450, 460 area. We were even looking for, if there was an upside break above to new highs, that we could potentially see a rally even as high as the 480 to 500 level. But really at this stage we've seen at least a short-term topping formation, and now consolidation point. It'll be very interesting to see how deep and how far copper goes. If the US dollar index goes through any short squeeze and we see very strong US dollar, we could very well be the catalyst to begin a much bigger picture copper profit-taking cycle. The key level would have to be copper breaking below 420 to indicate that some sort of reversal has come underway. Until then, if so long as it holds in this 440 area and rolls back up, we could always go for another retest of the high. So I wouldn't be too eager to short, but watch that US dollar index for the Q on copper. Next here I want to take a look at gold futures, and we were originally looking for a potential wedging formation for one more leg lower in gold, but again, due to crisis and other circumstances, gold has found that short-term low and has rallied all the way back to its previous highs, and silver has actually even exceeded that. And so really at this stage, we're not as bearish on gold as we were earlier. This consolidation and down here could very well act as the base from which even another significant rally could occur. So while we don't want to make an upside forecast yet because we haven't exceeded the previous highs, if gold does act very well in this 1410 to 1430 area and is able to use the momentum to break to new highs, we could setting targets even as high as 1480, 1500 or even higher on gold, and that would certainly turn everything bullish again for a little while. Next year, I want to take a look at crude oil, and this is where the media has been focusing all their attention, obviously with Saudi Arabia being in the headlines. It's certainly short-squeezed oil as it shot up toward the 96 to 98 level and has even exceeded that in the early mornings here. And really at this stage, we now have a situation where crude oil is just going along with a massive momentum and a catalyst story. It's hard to technically project where exactly that goes. There are some measured moves that go to 103 on the upside and even up to 110 or 120. But before we do that, I want to see what type of price stabilization we have after such a massive update. So certainly I don't want to make any forecast. There's nothing bearish about this, but obviously when there's a media story underway, you'll always have a circumstance where there's a certain amount of volatility up and down that you don't want to over forecast. Finally, I want to take a look at the 10-year Treasury notes, and while there was a breakdown the other week on the downside, there really has been no follow-through selling as it's been working its way higher. And now during this crisis period, and especially if the US dollar strengthens, we could see money start flowing out of equities into Treasury notes. So we're not necessarily outright bearish anymore, but there's nothing really bullish about the price action either yet. So we're going to be watching to see whether the Treasury notes can actually stabilize and bottom here to create what may be the lows of the year. That was your Monday Futures Market Outlook. Thank you for joining me.